Hey traders, Raghee here, and in tonight's free video for Simple Forex, we're going to go over some of the major hot zones that are occurring before we get the FOMC on Wednesday. So while the entire week really is all about Wednesday at basically 2 and 2:30 p.m. with the FOMC economic projection statement and Fed funds rate, and then the 2:30 presser, there are a few hot zones that I don't want you to overlook because there are going to be opportunities in namely the Australian dollar and the New Zealand dollar. And I know there are a number of Japanese yen economic events, but remember the yen is going to go right from the BOJ driving the story to basically the FOMC and the risk environment. So keep that in mind. I'd rather not commit too early to the pound or the yen. We'll talk about the pound later this week. I'm getting way ahead of myself. We've got a lot going on this week, and we're going to be covering it all in the chat room because this week is going to be really a mover and a groover. Okay, so what's going on with the Aussie and the New Zealand dollar? Let's take a look at the charts because what I want to do is give you some scenarios for how you can start to kind of map out the way in which you're going to be playing these volatility events in front of the Fed, because after the Fed, it's going to be a different conversation. Before the Fed, the Aussie gets to be the captain of its own ship, as does the Kiwi, but there's going to be some hesitation. I call that guillotine syndrome. And once the US dollar, which equally kind of means the euro as well, drives conversation on Wednesday, before that, the Aussie's going to have its say. And there are a few places that we can play Aussie, but it doesn't have to be against the US dollar. Where do we want to focus? We want to focus right here. One of the best individual currency stories we have is the weakness in the British pound. So why not take advantage of the strength that we're seeing from the number one strength story, that's the Australian dollar, against the weakest in the British pound. You put that contrast together and what you get is an excellent margin for error. Let me explain what I mean. The margin for error comes from at least considering, what if I'm wrong? What if I'm wrong about all this? What if the Aussie does not strengthen? Well, pitting the Aussie against a much weaker currency in the Brexit-affected British pound gives you a cushion for Aussie weakness because the pound will be weaker too. You can say the same thing about the euro, but depending upon what Janet Yellen says, and I do believe, here's the dangerous part about what's happening with the US dollar right now and why I want to sidestep the US dollar and the euro in this conversation, is the market is starting to discount pretty heavily some US dollar strength. Here's a US dollar, the second strongest performer today, is starting to discount some US dollar strength because we are expecting a more hawkish Janet Yellen. How do I know that? We'll talk about that in the premium video and how we will set up the US dollar going into Wednesday, because there's some very interesting signs about what traders specifically are wanting to hear, and you can see it in the price action of one very specific and very special futures contract. The Aussie versus the pound, the Aussie even versus the yen could be interesting. We're going to keep the yen until Wednesday. We're going to focus on the pound Aussie tonight. We're also going to focus on the pound versus Kiwi, the pound versus New Zealand dollar tonight as well. Look to sell pound, which means you're going to be shorting both these contracts. Look to buy the Aussie, look to buy the Kiwi. So what are these levels? Look at the way in which the market could rally on any kind of Australian dollar weakness. Pound Aussie would take advantage of Australian dollar weakness and then buy into it, which would mean a short here. What time frame should you look at? Look for trend follows on the 480. But also, and here's what I want you to keep in mind, because this is going to keep you out of trouble. When you look at the pound Aussie, this is how we quantify volatility in the Simpler Forex chat room. This is really almost just this stealthy little edge that we get. Think about a plus or minus 85 pip hourly movement range and ask yourself, if the market were to move higher by 85 pips immediately in front of that economic release, which again, look at the economic calendar, Look at when this is coming out, 8:30 p.m. This is Eastern, okay? So make sure you know what time that is in your part of the world. Factor in a plus or minus 85 pips. Where does that land you? And does the market still keep validity at that level? I'm going to tell you, you're probably better off thinking about some of these resistance levels inside the wave for that trend follow. And on the pound Kiwi, since we have more proximity on the daily time frame, you can focus on the daily time frame of the pound Kiwi. And really what we're looking at is probably more along the lines of a fade. Think about the 1495 to 1570 area, keeping in mind if we break 216, all bets are off.